Hello everyone and welcome back to the 𝐓𝐡𝐢𝐬 channel. My name is 𝐓𝐡𝐢𝐲 and today we're going to be diving into the latest big news from the Federal Reserve, which announced its first interest rate cut since 2020. Now this is a major development and I want to break it down so you understand what this means for the economy, your finances, and what to expect going forward. Now my obligatory disclaimer as a licensed professional, this video is for educational purposes only and the information provided is not considered financial advice. Please consult with a financial professional before making any investment or financial decisions. Okay, now what happened? Now on September 18th of 2024, the Fed cut interest rates by 0.5%, lowering the Fed funds rate to 4.9%. Now why is this significant, you might ask? Well, it's the first time the Fed has cut rates since the pandemic, and it's an aggressive move aimed at stabilizing the economy. Now, inflation has been declining for several months, and the Fed feels confident that it's starting to win the fight against rising prices. Now, however, the main concern now is the job market. With unemployment rate currently at 4.2%, the rate cut is meant to help cushion that and prevent a bigger slowdown in employment. Right now, looking ahead, the Fed has indicated that additional rate cuts are likely. Now, there's a consensus that the projection that the rate will fall to 4.4% by the end of 2024 and even further down to 3.4% by the end of 2025. Now, that's more aggressive than they had initially planned. Now, back in June, they were expecting smaller rate cuts. But this shift suggests that the Fed is being proactive in balancing growth and inflation, now aiming for a so-called soft landing where the economy slows down just enough to control inflation without falling into a recession. It's a total tightrope. Now, unfortunately, not everyone at the Fed was on board with this move. Fed Governor Michelle Bowman actually wanted a smaller 0.25% rate cut. Now, it's the first time in 16 meetings that we've seen a split like this among Fed officials. All right, so now how did the markets react, you might ask? Well, fairly positively. Now, the S&P surged and even hit a new high after the announcement, with investors feeling optimistic that lower borrowing costs will boost economic growth. This move is expected to lower borrowing costs for mortgages, credit cards, and business loans. Now, we've already seen mortgage rates drop down to 6.2%, the lowest level since early 2023, and further cuts could bring even more relief for U.S. homebuyers. However, it's important to note that mortgage rates don't always move directly in line with the Fed's rate cuts. They're also influenced by things like Treasury bond yields, so don't expect mortgage rates to drop overnight. And finally, we can't ignore the global impact of this decision. Now, central banks around the world are closely watching what the Fed does in the United States. As US rates fall, other countries, especially Europe, will likely lower their rates to stay competitive. We're already seeing the pressure on the US dollar, which has weakened as a result of the rate cuts, easing some pressure on international markets. Right now, in coming months, I think we're going to really need to keep a close eye on whether the Fed follows through with more cuts and how that impacts both inflation and the job market. Now, the big takeaway here is that while the rate cut provides some immediate relief, the broader effects will take time really to materialize. So what do you think? How do you think this rate cut might impact your financial decisions on whether you're, for example, buying a home, investing, or just day-to-day budgeting? I'm going to put my contact information at the end of this video. Please let me know how you feel about this. And of course, don't forget to hit that like button if you found this explanation helpful. I'll also keep you updated with more financial insights, so please make sure you subscribe. I want to thank you again for watching, and I'll see you next time. Take care. Bye for now.